Hello listeners and welcome to the Montel Weekly Podcast, bringing you energy matters in an informal setting. I'm Richard Sverrisson.
And I'm Siwecka.
Today we're back in London and joined by Wayne, Bryan and Chris Eales. Wayne is an energy analyst at Alfa Energy, a gas expert who is a regular speaker at conferences around Europe, including our own. Welcome, Wayne.
Thank you.
Also joining us our very own Chris Eales, Montel's French bureau chief. A warm welcome to you, Chris.
Hello, Richard.
I see you're only wearing single denim today, not double denim. That's positive. That's a nice way to start the pod, I think.
We'll get on to fashion a bit later.
Yeah, okay.
Because you're looking very interesting today. Lovely cut of that. That reminds me of
my jib. You like
my
the cut of my
uncle
jib,
from 1950s, I think it was.
Very classy.
Well,
He was very classy uncle.
Is it second hand?
Anyway, thank you, Chris. And listeners, we apologise for a lot of drilling noise that's going outside of our window. They're trying to keep pace with with us on the pod, but I don't think they quite managed it.
Building a wall, aren't they?
Yeah, exactly.
It's quite popular now.
Today, we're focusing on European gas issues, and we'll be tapping into Wayne's superior knowledge on these matters. Let's start where gas prices are now, Wayne. I mean, they're at historic, also not historic, but multi-year lows. So what's happening? What's going on? And is this good news?
Well, in terms of the good news, it's good news if you're an end user. If you're a producer, maybe it's not so much good news with prices at these levels. However, after last year, when the market was in completely the opposite state in terms of pricing, I think they can live with that for the time being. In terms of the prices where they are, I think it's fully justified at the moment. If you look at all the factors now that are contributing to this price fall, we're looking at the oversupply of LNG, which for me is one of the primary reasons.
We'll get back to that later, yeah.
Of course. Also, as well, you look at the other fundamentals in terms of weather. Last year, towards the end, as everybody knows, we had the beast from the east. That drained European storage levels. Also, as well, we had a record hot summer. Which had other effects on different parts of the market. We had problems with the French nuclear, river levels were heating up. All in all, we actually had a lot of bullish issues this time last year, and now we're seeing all the risk premiums that were built into the contracts. If you look at Q3, where the market sort of topped out, sort of October, November, we've lost literally... If you look at it on a curve, we've lost all of that upside premium. So, for example, looking at the summer 19 gas contract, that's fallen by literally half.
Yeah, so this is all kind of the risk premiums that were here last year have disappeared, and this is all basically fundamentally driven. Is there any regional variance here in terms of prices, say, for example, in other parts of Europe, or are the same factors?
Looking at most of Europe, in fact, the areas that I cover and my company we cover, we're seeing the same sort of downside on the curves. I've got several charts that detail country by country calendars on one chart, and you look at the shape, it's pretty much the same. Spanish gas prices have really fallen now. They're at lows we haven't seen for over a year and a half. Even Italian gas has been a bit softer as well, and that obviously notoriously is one of the most expensive gas prices. So in general, regionally, most markets are in a similar position because we're all benefiting from the supply glut that is LNG at the moment. I mean, this flurry of cargoes has been never-ending, really. I think last month we broke a couple of records. The first one was send-out. I think it was 2 Fridays or 3 Fridays ago. The amount of send-out, LNG send-out, broke the all-time record. In terms of cargo arrivals, March thus far into Northwest Europe, it's been about 77, 78 cargoes. And the previous record was set in January, I think, at 52 cargoes.
That's this year.
I'm talking, but these, and they break records going back to as far as the data is available, 2013.
And where are these cargoes coming from? Although we'll touch more on energy later, but
diversity's really been important. I mean, we've seen a lot of diversity, but Russia's been really been ramping up their send out with the ship-to-ship transfers in Norway that have been occurring, and Yamal has exceeded expectations in terms of send out. So a lot from Russia, but you've got players like Angola, Mozambique, Peru. We've seen a real diversity of cargo.
Those cargoes are coming into Europe from Peru and Angola and US. Of course, the US.
And don't forget, South Hook made some technical changes that allowed it to receive cargoes that didn't just originate in Qatar, and that's made a huge difference.
The UK terminal, yeah.
The UK terminal was only set up for Qatari gas, and they made some technical changes, I think, to oxygen levels that now we're receiving cargoes from all over the world into South Hook, which has really helped as well.
But these, I mean, it's the oversupply that's driving the prices down across Europe. But Italy, Spain, are there other factors influencing this, or is there?
Spain's been a record importer.
Yeah. You mentioned the milder weather. The French nuclear availability. We'll come back to that as well, Chris. But I think it's mainly in the southern European markets that it's the supply glut. What would you say then is the outlook going forward, Wayne? I mean, could prices go much lower?
I think, if anything, going into Q2, we could see prices fall, but I don't see it falling massively. I mean, looking at the day ahead, will it get into the 20s? I'm not sure. It's a possibility. We're not too far away from that.
This is pence per therm. We're talking,
So
pence what's the euro? The euro megawatt hour equivalent of that would be, around 10 or under 10 potentially. Yeah.
But it will need a lot for it to go that further, because we're already at these really low levels, and we'll be looking at some tightness probably in Q3. But I think Q2 has got the potential.
Tightness
to
in
fall.
Q3 because demand will be...
Well, in Q3, there's a lot of maintenance going on.
Okay.
There's a really heavy maintenance in Europe, Norway and the UK especially.
Yeah.
So that will feed into it. And also, Q3, you might see an uptick in demand from Asia ahead of the winter for restocking. So if that is the case, Q3 could be a little bit tighter and we could see a little bit of upside. However, we'll be going in, if all things status quo remains the same and there's no shocks, then we'll be going in from quite low levels in terms of prices. So for me, the outlook is pretty much more of the same, barring any shocks that we're not quite aware of at the moment. And also renewables have been very strong this year. Germany, UK wind has been a real good provider. So that, in tandem with lower demand, has also been driving this price as well.
Okay, sure. Let's look at France, Chris. After all, you live there.
I do live there, Richard. That's very astute of you to point out again, actually. But you didn't comment on Wayne's jacket. It's very nice. It's waistcoat, brown waistcoat, shirt and tie.
But it's not as classy as double denim.
No, but
it's single denim.
It's a
That's
step
why I
up
thought
from
I had
yours.
to mention it, Chris. Yeah. But move really swiftly onto gas, and French gas in particular. Chris.
It's a gas.
It's a gas, yeah. But you would say the same factors are driving the French market, even though France, if we look on the power side, it doesn't really have that much gas-fired generation.
No, but the drivers are similar. You have pipe gas coming from Norway, Russia, of course, and then you have 4 LNG terminals in France, in the south and the north, on the south coast and the north coast. So, but, as you said, prices are following from the Dutch hub, the most liquid hub, the TTF. They really follow that, and so the prices have come right down. I think they peaked last year at something like they were high last year at 18, and now they're down to 14 or so. So they're the same drivers. Wayne's told you about this. There are the same drivers, but you asked about the gas-fired power plants, but it does have an impact, even though it's a tiny proportion in terms of the overall generation. It is important because, for example, last summer, you touched on this, Wayne, when we had nuclear availability, we had problems with availability because of heat waves, which cuts generation at nuclear power plants because there are river temperature levels that have to be respected, and these weren't respected, so they cut generation. When they cut generation, what takes its place? Well, actually, last year it was gas-fired, power plants that were sparked up.
And so units that France has. It's peaking units mainly France, isn't it?
Yeah. Well, in that case, it wasn't peaking units in a way because they were replacing nukes. Interestingly, last year for some. So that does have an impact. It's an interesting difference with France, I would say, because of the use of gas heating in France as well.
Maybe some of the imports from neighbouring countries is also gas-fired generation, and under those situations. Potentially. But we've seen some nuclear disruptions in France, as I mentioned by Wayne and by yourself, Chris, in the last 2 years, really, I'd say.
2017.
2017 it started. That was when it really first became apparent. What's the outlook for this year, Chris? Would you are we out of the storm?
Well, if you talk to EDF, they will tell you they are out of the storm. Of course, they are experts in positive information, but the reality is probably not as rosy as they paint it. But it is still a better picture. We're looking at a better scenario than the one 2 years ago, for example, when you had reactors closed and you had technical problems with too much carbon in your steam generators, which is a very bad thing. So anyway, you don't want too much carbon in your steam generators, in the steam generators. So let's be clear about this. Anyway, so
we have covered this in another.
We've covered this a bit, but what I will say is which we also covered as well. But the interesting thing about this year, one of the interesting things is that they've got 7-10-year visits, so they've got big outages lined up. Big nuke outages, and we've confirmed that recently since I last spoke to you in Gay Paris. There are 3 already underway and 4 left to do this year. So that could, there could be difficulties, there could be extensions, so that could hit.
That's a potential curveball then.
Yeah. So you've got the heat wave, and you've got the.
It's a risk for me.
Yeah, it's a risk.
It's definitely a risk.
But is it being priced in? When?
I imagine there's some element of French nuclear risk premium. Same for Belgium, even though they restarted Doel a bit earlier than was expected, which was a bit of a boost. Still, there's always going to be concerns.
The market is looking... Sorry, Wayne, I cut you off, didn't I?
No, carry on.
The market's looking at Q4 now, right? Or possibly has been...
For electricity generation.
Yeah, for electricity generation. So they're starting to worry about... I hear from traders, they're starting to worry about maintenance issues that could be... maintenance starting in the summer that could go into
That's
winter.
the problem. Extensions are all... Even in the UK at the moment, we have 6 out of our 9 reactors out. And any normal circumstance, that would really be quite bullish. But at the moment, because of the low gas prices, because of high renewables, because of low demand, it's not having as bigger impact as it usually would. But again, these extensions are always a cause for fear, really.
Absolutely, and even Japan is restarting.
They're
reactors,
restarting, yeah.
So that means that's also then lowering Asian gas demand.
Correct.
So the nuclear element here is quite an interesting factor in the whole gas pricing dynamics, isn't it?
Same in South Korea. They restarted quite a few recently. They had quite a lot of extended maintenance, so that's lowered their imports as well. So nuclear is a common theme throughout Europe. In both basins, Atlantic and Pacific, it has an impact on prices in Europe as well as in Asia. So.
What do you see as the potential unforeseen factors here? Nuclear is one, potentially. Are there any others? I know you haven't got a crystal ball, Wayne, but are there any other sort of curveballs that could potentially
geopolitical factors?
Yeah,
have been quite high at the moment, and this is something we're looking at quite a lot because they're affecting all markets: oil, gas, power. You've got the US-China trade talks that are ongoing that are having an impact. They could go wrong. You've also got the geopolitical situation in North Korea. Even though things have smoothened out a bit, there's still a risk from that. What's going on in Venezuela? Throw in Libya. There's a lot of Brexit. There's a lot of uncertainty geopolitically, which could throw some curveballs. Also, as well, the Norwegian hydro issue, that's still a problem. The reserves are still probably below the 3 or 4 year average now. I think they recovered of late, but the outlook still isn't.
The snowmelt season is just about to start anyway, or it's already starting, but sure.
But their prices, if you look at the Cal 20 Nordic contract, it's nowhere near where it usually is this time of year. So for me, that's also a risk. And hydro levels in general across Europe are still not great. And that was another factor that we saw last year. And again, LNG, we could see a cut in LNG production if prices keep falling. I mean, the Asian price is now it's below the UK month ahead price and is also below $5. So that, again, could have an impact. Same with the coal market. There's been, rumours and talk of production cuts similar to OPEC in the coal market. So for me, there's a lot of factors that are still out there. And as we know, we can never rest on our laurels. We saw what happened with Forties. No one expected that, and that caused a huge spike. So beast from the east.
Well, rough.
There's been many things over the years. And again, the summer, even though the forecasts at the moment don't support it, we could see another 45 degrees summer, and that caused chaos in the markets last year.
You mentioned the geopolitical issues. I'd like to touch on another one, which is potentially the sanctions on Nord Stream and Germany. How do you see that playing out and having an impact on developments in the gas market? I mean, the threat of sanctions on companies that are involved in the pipeline. I mean, that's certainly a big risk.
That is a big risk as well, and I think America are quite keen for this not to happen. But I think the Germany are keen for it to happen, and so are several other European players.
For the pipeline?
The pipeline, most definitely. Especially, I mean, Germany, I think they definitely are happy to have it.
40% of their imports, gas imports, are from Russia, aren't
exactly,
they?
Exactly. I know they're trying to wean themselves off it, and they're looking to build LNG terminals now. And I heard Trump saying, we'll send LNG to Germany, we'll send it to Europe. You don't want to become over-reliant on Russian gas. But I see it happening. There's been a lot invested in it. A pipeline, part of it's already been built or is continuing to be built. So for me, it will happen. But there will be some bumps in the road, so to say.
Does Germany need LNG terminals? I mean, we've got a massive overcapacity of LNG terminals. I mean, Chris mentioned the ones in France. There's several in Spain. I mean, taking Europe as a whole, I mean, there's over 200 BCM of capacity, and a lot of that is underutilized. I mean, the vast majority of it, isn't it? So why build new LNG terminals?
When they've got no coal, what are they going to do? So I think this is preparing for that. Obviously, they've got a lot of generation to replace. So I think import terminals are needed in Germany, and it gives them access to this market. So for me, I think Nord Stream will go ahead, and I think the LNG terminals, I think they're looking at building 4 at least. They'll go ahead as well.
You mentioned Brexit. What I mean, it's if anything is coming clearer, it's the demand. Not Brexit, please. No, just a slight touch on it, Chris. I don't know, but I mean, a no deal on the 12th of April.
Carbon. For me,
okay, it's carbon.
It's the link with carbon. I mean, we all know that if we have a hard Brexit, that's very bad news for carbon. There's a lot of positions that the UK players hold that will get unwound. There's also I mean, not only positions being unwound, but also the permits as well being dumped back into the market. So that wouldn't be great for carbon. So that will have an effect. Whereas obviously a positive deal, I think some of that's already priced in now, but a positive deal is good for carbon. Still don't think it's going to hit the 35 that a lot of people seem to talk about last year.
The euros a tonne for carbon,
it might trade towards 30, but I'll be amazed if it gets to 35.
It's quite comfortable in that 20 to 23 range now.
Sideways range bound now for the past few months. And also you've got to look at some other factors for carbon, like low coal generation, like warmer weather, etc., and economic concerns. So,
what's the outlook for demand? I mean, we talked a little bit about supply, LNG, Norway, UK, etc. Where's the potential demand growth for gas? I mean, given Europe has a really ambitious climate targets, both for renewables and for carbon emissions, where does gas fit in?
I don't see demand following its traditional upwards slant. I think some of that is attributed to the simple things like energy efficiency, like renewables, but also as well in terms of that, you've got to look at the broader economic situation. You look at the PMIs, they're not great. You look at all the production numbers, not only coming out of Europe, but also China, they're not great. So I think a lot of companies are struggling. Future orders struggling. Brexit's going to have impact. So I think a lot of the industrial gas demand will start to fall. So we might see some little upticks in demand, but I don't see the overall trend for gas anyway rising that much. So I don't see demand growth prospects as being that great.
In France, Chris, what's the outlook for gas demand there? I know you touched on biogas, or kind of, I think that's potentially a growth area there, isn't it, that people are looking at?
Biogas is insignificant at the moment, but it is an issue because of the desire to so-called decarbonize, and so you've got to find ways to have green gas. And now the country has set out in its energy path some targets for this green gas, if you like, which are not very high according to some observers and analysts, and so that's going to be an issue going forward. That's definitely a current subject of debate.
I mean, there's huge challenges in there, replacing, natural gas that's being produced in vast quantities with methane from cow effluent and animal effluent, and also food waste. and hydrogen, I suppose. The methane hydrate,
something that's in Asia where they're taking it out of ice. That's another form of potential gas.
And these are so-called renewables, so this would be a green gas as well, so it would be part of the renewables targets, in a sense, on the gas side. But do you see gas as a kind of bridging fuel? There's a lot been talked about the bridge from the present fossil fuel world into the renewables world, and gas will see us through that period. Is that how you see it, Wayne?
I don't see gas as a bridging fuel personally. I think it's here to stay for a long time. And you look at the investments in gas around the world, and in terms of LNG and even gas efficiency, better efficient plants. I don't see gas as a bridging fuel. It will. Especially all the coal, the fallout from all the coal now. Coal's being cut in many countries over the next 10 years.
I mean, certainly if we're talking Europe, I think that's correct. But if you're going to meet those very ambitious targets, keep ourselves to 1.5 degree change in temperatures, global temperatures, then is there a role for gas? I mean, what do you think, Chris?
I think that it's going to be tough, isn't it? On both sides, it's tough to do it, tough to do without it,
yes,
right?
Yeah, exactly.
So, but there is apparently there's a willingness to go down the line, go down the path of decarbonisation. So, but Wayne, what you're saying is you don't think that that's really going to have much impact.
No, maybe longer term.
New 2030, maybe.
Yeah, new technologies and increased renewables, but you're still going to need it. I mean, it might be used as baseload or backup, but I think you're still going to need it. And why would all this infrastructure be spent on pipelines, terminals? A lot of LNG projects, FIDs are being passed. Why would all this investment be happening if it's only a bridging fuel for the next 10 years? Why would you invest in it?
Is that bad news for the planet then? I mean, this is off subject possibly, but that
making all these investment stranded assets, I don't know whether whether that's a good move or not. We're onto something here as well, I think, Wayne, with the switch from coal to gas-fired generation. And I think in a lot of countries now in Europe, there's the gas plants are back in the money.
And Asia.
And in Asia as well. Now, where is gas? I mean, this fuel switching occurring? Because it's not happening everywhere. No. I mean, if we keep to Europe, I mean, where in Europe do you see it? Do you see it most happening?
Well, it can happen in several countries, and again, it depends on price. The price will incentivise that. I think some say TTF at around 14. I've seen some say 12.5. Okay. Will incentivise more fuel switching.
So we're there now.
There's some fuel switching. There's evidence of it already happening now. Yeah.
Where's the evidence of that?
There's some switching going on, definitely in Germany.
Right.
Maybe in other parts of Europe as well. But there is some evidence of switching already happening. I think that'll continue.
Okay.
But again, it depends on demand levels as well, and the coal price is still falling. Coal's under similar pressure to gas if you look at some of the fundamental reasons why the coal market is where it is. It's kind of similar situations. High storages, low demand. I think there's definitely potential for more switching over the summer. But again, it depends on a raft of factors for me.
And has the carbon price floor in the UK helped this? The move to more gas-fired generation? Obviously, it's put coal out the money, but it's also a contributing factor with low gas prices.
Definitely. It's a definite factor. Yeah.
Demand. We touched upon demand in Europe, but obviously demand in Asia plays a key role here. What have we seen happening over recent years, Wayne? Because it's obviously a key price for a key price driver for European markets. What's happening in China, Japan and Korea? You mentioned Japan and Korea with the nukes coming back online, but China is a big. I mean, that's a key market,
very key. Key for a lot of the markets. Gas, it's key for coal. Well, obviously, China. Everyone knows about the aggressive coal to gas switching program that's still occurring. Yeah. Also, as well now for China, they managed to get to a level which is one of the reasons why we've seen so much LNG. Their storage levels are really full now. They are incentivized or told to, let's get these storages full ahead of the winter that we're now about to exit. We're now exiting that winter, and them like us had a very mild winter, so they've also got a storage overhang. Now we're in the shoulder season, but typically we might see a pickup as we move into Q3. But again, it depends. Again, how's the winter going to turn out in Asia? That's going to have a huge bearing. But the good thing is they've already got really good levels of storage of gas they haven't used over the past 6 months. So for me, their demand will still be there. If you look at some of the broader economic numbers, again, you've seen their growth is falling. Also, you've got to look at China in terms of renewables. They've got some pretty impressive projects that have been completed or being completed that are going to have a huge effect. You've seen they've got 3 gorges, the world's largest hydro. They're building the world's largest floating solar, the world's largest solar farm. They're building a lot of the world's largest installations, wind. They're making real efforts for that. Energy efficiency, that's a big drive. So I think for them, what they're doing is having a huge bearing on what we're seeing in the Atlantic basin.
I suppose they don't have the hindrances of going through the whole permit processes.
No,
so they don't really care.
Say something, it generally happens. But that's the only thing about China that's a concern. There are always interventions, policy interventions that happen consistently, like the minimising of imports of coal now. If you look at some of the terminals, Qingdao, probably pronounced that wrong, but there's a lot of ships there waiting for clearance, not just Australian ships, just in general. They're really clamping down on imports.
For someone like you, Wayne, sorry to interrupt there, it must, getting into the minds of the people driving Chinese energy policy is quite a challenge here, because it's such a key important factor of the markets. But they throw throw spokes into the wheels.
It's quite hard to get. I actually met someone from the NDRC at a conference about 2 months ago, and she put together a very comprehensive presentation, which was really good to see. And there again, if I read into that presentation, they're talking about how they want to really slash coal usage because of the smog. And I've been to Beijing. The smog was quite horrific, to be honest. And not only in Beijing, there's other big cities as well. And they're also looking into LNG powered trucks. They're making a lot of ground.
I mean, clean air is quite a movement, isn't it, in China?
It's a big thing.
It was in London in the 1950s. I don't know. Do you remember that, Chris? Or, but that's what drove coal out of coal. Drove basically a decline in coal-fired generation within London. But so that's happening in China on a vast
scale. So that's really having a huge impact on the market. And same with Japan. Economic reasons, it was costing them a lot of money. They were the number one importer of LNG. They're not anymore. And again, I think they're up to 9 reactors now. There's still public opinion isn't great towards it. However, the economic benefits are there to see. And like China, they're also making a bit of gains in renewables. And same for South Korea. Their demand has also gone a bit down recently, but we'll probably see it pick back up again. I think Q3 will be the time. It will be the key moment for me. And there's also a lot of oversupply in terms of projects. So
I'm getting a hint here from producer Anna that it's time to wrap things up.
Already?
Did you mention Anna's jumper? It doesn't look like a bad TV screen, does it?
Not from where I'm sitting, Chris. No. But thanks for mentioning that. We're back onto fashion. We can
do an episode about
fashion and energy. We won't invite Chris then, I think. But anyway, moving back to the matters, the gas matters. We talked about LNG, a little bit about piped gas, but I mean, in light of all this oversupply and the glut coming into Europe, how is Gazprom reacting? I've seen it's selling a lot via its electronic sales platform. And what's going on here? So it's not really, it's not coming into the spot markets. It's coming straight into this
auctions.
They're holding their own auctions.
Yeah.
What does this represent? What kind of
they just want to get rid of volume, don't they? If you look at Gazprom, I think their strategy's been quite aggressive.
Yeah.
I think their sales into Europe are up 3% this year, thus far, and I think that's going to continue. They really want to make their presence felt. And if you look at it, it's like you've got Russia, you've got Norway, and you've got America, and it's like a 3-way battle now of who can get the most gas into Northwest Europe. So it's all about market share for me at the moment, and I think that's going to continue. Again, we might see, spanner in the works over the next month or two when the prices start getting, if they start really coming under more pressure, and we see them in the 20s, which could happen. Then we might see, some maintenances being extended, not only in Russian and Norway, but also in LNG. There's talk of extended maintenances now because we're looking at a real bit of oversupply at present. So, yeah, I mean, I think Gazprom will continue. I think it's more of they just want to get their gas into Europe. They want to keep that reliance.
Market share.
Market share for them is very
So
important.
would you recommend to your customers to lock in the prices at the moment? Or would you
The
tell them to
golden
wait?
question. It depends on, I mean, we risk manage clients. We have some, with different strategies. It depends on how risk averse you are. But me personally, if it was my business, I'd definitely be floating Q2. And again, looking at the winter now, it's still quite an attractive price. If you look at where the price was, it was at a real high point. So those that held their nerve and didn't get stopped out or didn't lock in their volumes because they felt it was going to fall, then yeah, I mean, it's still a good time to secure volume. But going into Q2 was where I see the weakness. After that, Q3, I mentioned there's extended maintenance. I mentioned there could be some new factors in the market. You don't know where the hydros are going to be. You don't know where French nuclear is going to be. Is the LNG slowdown going to happen? If it does, apparently Q3 is where it's going to happen. Storage is still in good position, but who knows, again, next month or two, we could see a return of some cold weather. But as it stands now, yeah, the Q2 for me looks like it's a continuation, but after that, we could see a bit of upside. So for me, yeah.
We'll have to invite you back in Q2 then, Wayne, I think. Yeah,
please do.
I'm afraid we've run out of time. So, I mean, it's been a great pleasure to have you here, Wayne. Thank you very much. Thank you very much for joining us. And a great pleasure as well, Christopher. And I'm sure we'll meet again.
We'll meet again. Don't know when.
And thank you to producer Anna.
Thank you, Anna.
Keeping
Thank you, Anna.
ship here. Keep listening to the Montel podcast and follow us on Twitter and on Montel News. For all the latest energy news, lots and lots of gas-related issues. Thank you very much.
Thank you.